Howdy out there, folks. It's your skipper here, Darius Dale, to present our macro minute for Wednesday, February 2nd, 2022. Started with markets this morning. We have stocks up, commodities up, crypto down, dollar down, global bond yields down. Big movers. We have the NASDAQ 100 index up nearly 2% to plus up nearly 8% week over week. Somehow that still pales in comparison to the move Nat Gas is putting on this morning, up 9% day over day. Shifting gears to the economic front. We're seeing Omicron have bounced. And when you look at the global PMIs, particularly the manufacturing PMIs that are released over the last sort of 24 to 36 hours, Omicron's definitely have an impact, will slow growth here in the first quarter. Not quite the same size of impact as we saw with Delta, however. So on the accelerating front, Japan manufacturing PMI ticked up in January. Ireland, Russia, Netherlands, Germany, Eurozone, ISM employment subindex, the ISM prices index. Keep your eyes on your fries there. And then lastly, Indonesia, unchanged with Spain. And then decelerating, we had Australia, India, Switzerland, Italy, France, Greece, UK, Brazil, Canada, Mexico, the US market PMI, the ISM headline, the ISM new orders, and taking it to the chart, the ISM supplier delivery times, percentage of respondents reporting slower supplier delivery times. That's the blue line here in this chart, ticked down to 34.4. We continue to see peak supply chain disruptions in the rearview mirror. This is a call we made right here on this program going back 3 months ago when the chart was making a lower high. You can quote us on that. I think we were among the first people on Global Wall Street to say, hey, look, we're moving past peak supply chain disruptions. And that's exactly what you're hearing out of the companies as well on a lag to our research. So GM came out with its earnings and guidance and effectively said, hey, look, we are moving past peak supply chain disruptions. And we didn't need GM to tell us that. The U.S. auto sales data for the month of January told us that as well. Accelerated 2.6 million to a SAR of 15 million in January. That's the highest SAR we've seen since June of 2021 and the fastest acceleration we've seen since May of 2020. With respect to markets and looking at our probable range setups, nothing overbought or oversold in our global macro risk matrix. S&P 500, that is still bearish FAMs with 9.8% of downside versus 0.6% of upside. As you know, the probable range process is quantitatively linked to our volatility adjusted momentum signal. So to the extent that the S&P breaks back to neutral VAMs or even to bullish VAMs, we will see the distribution of the probable range widen or we'll see a fatter right tail in that. So be careful not to sort of be selling things or shorting things too soon on that signal. WTI crude oil, that is still neutral VAMs minus 8% of downside versus 3% of upside. Bloomberg dollar index, bullish VAM still minus 0.4% of downside versus 1.5% of upside. 10-year treasury yield, bullish VAM still minus 6% or 6 basis points of downside versus 22 basis points of upside. Crypto, both Ethereum and Bitcoin are still bearish VAMs. Both have a tremendous amount of downside in the probable range relative to upside. Bitcoin minus 19% of downside versus only 3% of upside. And then Ethereum minus 30% of downside versus only 2% of upside. So be careful if you bought the dip in crypto when we said, hey, it's getting to the lower boundary of our probable range a couple of weeks ago. Golf clap if you took advantage of that. And then lastly, gold, still neutral VAMs, minus 1% of downside versus 3% of upside. So with that, Darius Dale presenting our macro minute for Wednesday, February 2nd, 2022. Best of luck out there.